Welcome everybody to today's webinar. This is Graham Anderson from the Crown Council and DCEdental. We are extremely excited to have Sandy Botkin with us today. He's been a great friend of the dental world and of small businesses all over the place. And we're excited to have him educate us on the world of taxes and about his innovative new product that is definitely going to change our lives personally as well as those of our practices. Just a couple of quick things. You are in listen-only mode, so you can hear us, but we cannot hear you. But time permitting, Sandy will take some questions at the end, and you can enter those questions on your side panel over there in the question section. If you type those in, that'll come to us, and we'll run through those at the end when we've got a couple of minutes. Just to give you a little more of a background on Sandy before I turn the time over to him. Sandy is a CPA and a tax attorney that has been training millions of small businesses how to get their taxes down to the legal limit for over 30 years. He teaches tax reduction at Donald Trump and Tony Robbins wealth seminars and is a best-selling author of the book Lower Your Taxes Big Time and several other best-selling business books. Sandy is a frequent guest tax expert on NBC, ABC, Fox, and CNN. As a young man, Sandy worked for the IRS training their corporate tax lawyers before joining a Big Five accounting firm. After 3 years, he left that firm to start his own company. His sole passion today is to educate small business people about the huge tax breaks available to them and do it in a fun and entertaining way. He has earned the reputation as the #1 tax expert for small business and home-based business owners in North America. Sandy, it's all yours.
Well, thank you, Greg. You know, I always remember the introductions that I get, and I have to admit my favorite introduction occurred in Canada. I was a master of ceremonies at a home-based business conference with a whole bunch of folks, and this beautiful girl came up to me in a bouquet of roses, but she didn't speak English that well. And she said, "Mr. Botkin, these roses will eventually die, but you will smell forever." I was touched. Well, first of all, I want to thank you all so much for being here today. I know your time is valuable. So I'm going to jump right in. This is a very content-oriented program. You may want to take some notes because I'm really going to move. But first, let me give you a quick background on myself so you know why I'm qualified. First of all, I am a CPA, as mentioned by Greg. I'm a tax attorney. I'm also a trainer, former trainer for the IRS. And for those of you who think of an IRS agent as a rat, I guess that makes me head rodent. And when I was at IRS, I realized that people way overpaid their taxes. And the thing that got to me was my parents. My parents were one of the larger antique dealers in North America. But despite having a good business, my parents never took a vacation outside the U.S. They didn't drive expensive cars. Well, one day I reviewed their tax return, and despite being prepared by one of the more notable CPAs on Long Island, we filed amended tax returns to get back $16,000. It was the first vacation my mother and father ever took outside of the country. And about 4 years later, my mom coincidentally died of lung cancer. So I decided to start up my company called the Tax Reduction Institute, which I've been president for over 30 years, to show people, small business people, medical professionals, how they can reduce their taxes and at the same time bulletproof their records. Imagine increasing your deductions and reducing your chance of audit, which is, I think, really interesting. I was a featured tax coach for Tony Robbins, and I was with Donald Trump in the Tony Robbins wealth seminars. I'm a best-selling author of the book Lower Your Taxes Big Time. And I've been a guest expert on many different things, from Fox News, usually on April 15th. I'm a commentator, CNN, CNBC, CBS, and so on. All right, there's a couple myths. I want to mention a little bit about our goals today. First of all, to give you an education and some tools to save you thousands of dollars in taxes, and that's going to be my goal. In fact, my goal is to save you at least $4,000 every year on your taxes by the end of this webinar. So a quick agenda is going to be to dispel some tax myths, to show you how easy it is to save money on taxes, to show you how to document your deductions so you can have your peace of mind of never having to worry about an IRS audit again, and do it for almost zero cost and zero risk with some easy-to-use, affordable tools. Now, I want you to notice that there are some questions. If you may have some questions below, and on the right-hand side, you'll see a little box. I want to encourage you to submit those questions. And you do this during the webinar, and if we have time, we'll take them at the end of the program. So please send me your questions. You are encouraged to do that. Now, another thing, I am not a motivational speaker, but one thing I find is when I put money in people's pockets, they'll become a lot more motivated. And I'm also not going to tell you a lot of jokes. I mean, we'll have fun, but that's not my focus. So if that's what you want, you may not want to listen to this. But if you will give me a focused hour, I will put a couple of $1,000s in your pockets. I'll give you that peace of mind of not having to worry about an IRS audit again. I'll show you how to document and bulletproof your records. And put that amount of money in your pocket for the rest of your life. Fair enough? All right, a little bit about, I want to start off where your money goes. You ever wonder what happens to it? People ask me all the time, where does it go? First of all, what's interesting is if you call the American Bankers Association, somewhere between 20 and 40% of what you make goes out in debt. Now, debt includes mortgage debt, real estate, personal loans, college loans, dental school loans, all debt, personal loans, everything. In addition, so it averages about 30%. Taxes. Taxes, if you take a look on the web, you'll find that the day called Taxpayer Freedom Day, which is the day that the average person has to work to pay off their federal, state, and Social Security taxes. And they vary depending on your income in the state. They vary anywhere from, from zero, but generally from 18% to up to about 45%. The average is 30. Well, if roughly 30%, 20 to 30% is debt, and 30% of what you make every month is in taxes, that leaves you roughly 50% for everything else. Everything else includes retirement, education for your kids, medical, dental, repairs, emergencies, food, everything. If you wonder why you're having trouble getting ahead despite making a nice income, this is the reason. Now, also interesting enough is that with tax savings, you can achieve an early retirement. And there was a study done by Harvard. They wanted to know what percentage of the population can retire at age 65 with the same standard of living they had before retirement. And the answer is really quite startling. Only 4% of people can retire with the same standard of living they had before retirement, which means 96% have to either continue working, reduce their standard of living, or live on some form of charity. In fact, I was in Miami Beach about a couple weeks ago, where there was a newspaper article on this couple who were retired, and they were eating dog food because they couldn't afford to live on their retirement. Now, hopefully you will all be in the top 4% if you listen to me, I'll tell you that. Let me ask you a question. Would you rather have, and this is a very interesting thing, because what's interesting about taxes is that taxes is a very effective benefit. If you understand how to reduce your taxes, you can effectively save a tremendous amount of money. Would you rather have a $17,000 raise, or would you like to save $10,000 in taxes? That's the question. Which would you rather have? If you said $17,000, believe it or not, you'd be wrong. Because by the time you pay federal, state, Social Security taxes, and Medicare on the 17, you're left with less than $10,000. You're actually better off saving $10,000 in taxes. So the bottom line is a smarter taxpayer is a wealthier taxpayer. And there was a great study that I think was done by Donald Trump. And this is what he asked himself. He said, if you started off with $1 and your equity doubled every year without paying tax, you just had a double in your equity, how long would it take to be a millionaire? Well, at the end of 1 year, that dollar is worth $2 because you don't pay taxes on it. At the end of 2 years, it's worth $4. 3 years is worth $8. 5 years is 32, as you can see on the slide. Well, the bottom line is by doing this, it takes 20 years, but that money, that doubling, would be worth $1,048,576. Now watch this. Same 20 years, but you're going to pay 35% in taxes when you consider federal, state, Social Security, Medicare, sales, excise tax, capital gains tax. I don't think 35% is that high. So same dollar doubling, but now you're paying 35% on the gain. So at the end of 1 year, you're left with $1.65 because you got to pay some of that in taxes. Same 20 years, but watch this. This is how much it's worth at the end of 20 years. $22,370. Take a look at this. Know why there's a difference? The answer is compounding. You're losing the interest on the money. Albert Einstein once said, or is attributed with saying, that compound interest is the eighth wonder of the world. It can work for you by getting your taxes down to the legal minimum, or it can work against you. I mean, I want you to think about this. You already work hard. You have to work twice as hard to make half the money if you don't get your taxes down to the legal minimum. That's the point. And what's interesting is it's never been how much you make, never. It's always been how much you keep, and that's the important thing. Let me ask you a question. Do you all use cashback cards, rebate cards? What do you get? 2%, 5%? What if you had a 40%, somewhere between 20 and 40%, it could be more, as much as 45% actually, cashback card? And that card worked on everything you did, everything you bought, everywhere you went, everything. If you had this card, would you use it? Sure. I mean, you'd be stupid not to. I think we all agree on that one, correct? Well, I have some good news for you. You already have that card. It's called your business card. Because if you are in business, you can take deductions up to 40, it's actually to be up to 45% on everything you do, if you can justify it as a business expense. And most of that can be justified. That is the key. You know, what's interesting is that we have two tax systems in this country. And when I say that, most people think, sure, one for the very rich and one for, you know, the middle class or upper middle class. That is not true. There's one for employees designed to take your wealth, and there's one for business people, which is designed to create economic growth. And the reason for that is that small business generates over 70% of the job growth in North America. It's not IBM, it's not Microsoft, it's small business folks like you and I. And that is why Congress passes good tax laws for small business. And what's interesting is that if you know what you're doing, this rebate card can get you a 20 to 45% rebate on deducting meals and entertainment. When you deduct them, that's what you get. When you deduct your vehicle for your business usage, that you get that 20 to 45% rebate. You can deduct home office. You deduct the equivalent of your kids' college and weddings. I'm not kidding. I'll show you how to do that, in fact. You can deduct medical expenses and braces if you know what you're doing, travel, and much, much more. The bottom line is you can make all of this between 20 and 45% cheaper. But, you know, to get something like this, you got to have, there's a certain code of conduct. First of all, you got to run your business like a business, which means you got to try and make money. Secondly, you have to document your activities correctly, and we're going to get into exactly what you need to do so you have that peace of mind of never having to worry about an IRS audit again. How does that sound? And you have to pursue a profit, which means try and make money. Now, I want to emphasize something about our good tax laws. The government, and I'm going to say something that's kind of strange, the government is the biggest bookie in this country. It absolutely is. And here's why. If you have losses in your business, let's say you just start off your practice, you might have some losses. You've got a bunch of equipment, you've got a bunch of expenses, you're hiring assistants. I mean, you've got a bunch of expenses. And that business generates a loss. You can use that loss against any form of income you have. Interest, dividends, wages, rents, anything. If the loss exceeds your whole income for the year, you can carry it back 2 years and actually get a refund, get a check for the past 2 years of taxes that you pay, or you can carry forward all business losses up to 20 years. So you never have to, you never lose a properly documented business deduction. And I don't know if you heard the myth that you have to have a profit in the first 3 years. That is not true. All the government cares about is you operate your business like a business. And then when you start making money, then they want a percentage of your profit. That's why I mentioned they're the biggest bookie. Now, what's good about tax deductions, and as you can see here on the slide, is that it creates the cash flow that you never have to pay back. This isn't a loan. You never have to pay back a deduction as long as you have the right documentation. That is the key. And there are some cash drain myths that I want to share with you. For example, what's the difference between the tax benefits you get for a brick-and-mortar business versus a smaller business or even a home-based business? And the answer is there is no difference. You get the same tax benefits if you know what you're doing, whether you operate your business like IBM or whether you're a smaller dental practice or whether you're even a home-based business. And this is true, by the way, whether you are in business full-time or part-time. It doesn't matter. A lot of people think that makes a difference. There's another cash drain myth, which is one of the biggest in the country. In fact, it's only 7 words long. And those 7 words are, my accountant takes care of my taxes. Nothing can be further from the truth. If you learn anything, learn this. I equate that with my mechanic takes care of my car. Those of you who have ever owned a Jaguar would appreciate that myth. Oh, by the way, Jaguars are the only cars in the world that had more vertical mileage than horizontal. By the way, another interesting thing, I gave a seminar who said, Sandy, I loved your seminar, but you know what? I don't pay taxes. In fact, I got a refund. So I must be doing something okay, right? For he didn't realize he's getting back his own money. That's the sad part. Here's another very startling statistic. 84%, and this was actually a study done by one of the major magazines, 84% of small business people overpay their taxes by an estimated, you know how much? $150 billion. That's billion, not million, $1 billion a year. And what's even more interesting is that 90% of those people didn't think they overpay. How's that for startling? I mean, it's just absolutely, in fact, it was U.S., let's see, a big agency in the government, I can't think of it all of a sudden, it'll come to me, was estimating that the government accounting office, that's what it was, the government accounting office said that people are overpaying their taxes due to billions as a result of not having the right knowledge. Now, why does this happen? There's a whole bunch of reasons. First of all, one, they don't have the right education and the right tools. Things that they're doing are very time-consuming, and they do a lot of extra paperwork. They write things down, for example, in a tax diary. At least they try to write it down, and they're spending all this time and effort. Another thing they're doing is, another reason for it is procrastination. Procrastination is one of the biggest killers of deductions. Third reason, they have lost or faded receipts. You know, receipts now are fading, and they're disappearing, and then all of a sudden they go for an audit, and they don't have the receipt because it doesn't show anything, which is one of the reasons why I'm going to recommend that you should get a scanner. That's maybe a couple $100 to scan your receipts. The government does accept electronic documentation. Mileage logs are, you have to keep a mileage log when you use your car for business. You go to a seminar, you go to a convention. But if you don't have a mileage log, then you can't deduct any part of your car. And they're hard generally. They're a pain in the neck. That's another reason why people lose deductions. But the main reason is that people don't know the rules. So because they don't know the rules, what do? They're scared of an audit. And if they're scared of an audit, then they tend to take less in deductions. They think, well, that'll reduce their chance of audit, which is completely not true, by the way. By the way, does any of this sound familiar? Bet you it does. So we're going to be talking about the education and the tools. We're going to start off with the education, and then I'll discuss the tools. And I want to emphasize something here at this juncture. I am giving you a 30,000-foot overview of what I discuss in my tax strategies program. So I just want you to know that this is sort of an overview of what's available to you. The first thing I want to mention is deducting your meals. Let me ask you a question. Who are your potential clients? Who are people who could become patients or give you referrals or you can learn something from? So for example, is your best friend a potential prospect? Sure. How about your adult family members? Absolutely. How about other dentists? Can you learn something by talking to them? In fact, I've never met two dental professionals. In fact, I've never met any medical professional get together and not talk business. So virtually everyone that you meet, that meal can be deductible if you do it correctly. Does everybody see that? And if you're not writing off those meals, you are losing a lot of money. And what you can deduct is 50% of your meal and 50% of your fun. Now, when it includes fun, we're talking about movies, plays, golf. You know, golf's an expensive sport. If you can write that off, how would you like to write off 50% of that? Okay? The key is to write off your fun. This is IRS talking, not Sandy Botkin. Is you got to talk business in the same 24-hour day as the fun. Does that give you enough time? So let's take an example. Let's say I talk with Greg over lunch, and then we discuss business, and Greg says, what do you say we go out and play golf? And I say, well, if you show me how to play, I'll go with you. Is that talking business within the same 24-hour day? Yes. Let's say Greg and I drive to a football game, and he's talking business in the car, and he has intent to talk business with me. Is that talking business within the same 24-hour day? In other words, we talk business in the car while we're driving to the football game. Yes. And how do you document this? Who has the burden of proof of showing that we talk business during the same 24-hour day? Does the IRS have that burden, or do we as dentists have that burden? And the answer is we do. Here's an ideal documented day. It's in my written diary here. For who? We wrote Nick and Carol Hillman. Where? Palm Restaurant, Washington, D.C. Why? Asked for referrals. In this case, we got the name of Johnson. The date happened to be on this. Didn't show up in the photograph, but it is here. And finally, how much? In this case, it's about $200. So you want to write down the 4 W's and an H. Who, where, why, when, how much. Who, where, why, when, how much. if you write all of these things down, if you have something triggering you to do that, that's the key. You've got to have something triggering you to do it, or procrastination will set in, then you will never have to worry about an IRS audit again. How does that feel? Okay? Think about that. By the way, I want to emphasize here, people ask me all the time, they say, wait a minute, Sandy, you mean to tell me that the IRS will believe everything I say in my tax diary, my tax organizer, or tracker? And the answer is yes. Unless they can show fraud, the IRS has to agree to it, has to accept what you write in your tax tracker or tax organizer. Your tax tracker is your audit insurance against IRS. You know, many of you have malpractice insurance, you have car insurance. This is audit insurance. Think of it that way. Have peace of mind of never having to worry about an IRS audit again. Now, so again, the bottom line is you want to write down who, where, why, when, how much, and what what was discussed, but who, where, why, when, how much. Now, the problem is a lot of people don't have the correct records. And if you don't have the correct records, here's what happens. You're in jeopardy of an audit and not maximizing your deductions, and therefore not only having your deductions disallowed, not only paying more tax, but paying an extra 75% civil fraud penalty on the additional tax they get out of you, plus interest. That's if you do not have the right documentation. That can be pretty expensive, I'll tell you. Another problem is lost or faded receipts can be a big problem. That's why I normally recommend you get a scanner to scan all this stuff in. Well, but there's another way of handling that, and we'll show you how. We'll give you another tool for that. You know, I want you, a lot of people think credit card statements alone work. All you do is charge everything in your credit card, and they think that works. And you know what? IRS loves people who think that, because that is not true. You need to think again, because you need more information than the credit card provides. You need to provide who, where, why, when, how much for entertainment. Slightly different rules for travel. You need automobile mileage. The credit card alone will not bulletproof you. I want to emphasize that. In fact, there's an even bigger warning. In 2012, let's say, IRS is hiring 16,000 agents. Can't quite see it on the slide, but IRS is hiring 16,000 new IRS agents. Okay? Are your records ready? That doesn't sound scary. It should. By the end of this webinar, you're going to have more peace of mind than you can withstand an audit, and more cash in your pocket. How's that? And that will last you for the rest of your life. Another strategy, deduct home office, because if you don't have a home office, you're crazy. You probably learned, I bet you, if I ask you, did your accountant tell you, don't claim a home office, you might get audited and it's not worth it? I'll bet at least half of you have heard that, right? That is not true. That absolutely is not true. Because if you have a home office, that's worth, when I ran the numbers, that's worth $2,400 a year in cash. A year, okay? That's in cash. That's not deductions. And I based that on houses that cost $200,000, which is the median house in this country. So if you're sitting with a $300,000, $500,000, $1 million home, that's worth a lot more than $2,400 a year. Now, how do you claim a home office? Well, you've got to use an exclusive portion of a room for business. It doesn't have to be a homeroom, just an exclusive portion of a room for business. And so if I have a bedroom and I have, let's say, half of it, or I have a separate identifiable area for my business equipment, I can have the other half of the bedroom personal. And that's the square footage that I use for business would be deductible. In this example, let's assume 1/8 of my total square footage of my home is used as an office. Then what that means is 1/8 of the utilities are deductible. 1/8 of your interest becomes business interest. 1/8 of your taxes become business taxes and reduces your Social Security. 1/8 of your house can be depreciated. 1/8 of the rent, if you're paying rent and don't own a house, you could deduct. 1/8 of the maid service, 1/8 of your alarm service, of your alarm monitoring. All of this becomes deductible, lawn service, and so on. You know, having a home office can be very, very beneficial. The key is you got to meet the rules. So first of all, you want to use a room exclusively for business. Now, how do you prove that? Here's how you document it correctly. You take a picture of the part of the room that's used exclusively for business, and you keep the photograph. Do not send the photograph into the IRS. I was working at IRS at some point, and somebody sent in the photograph of their home office, and unfortunately in the photograph he was making certain undesirable hand and arm gestures. IRS doesn't have a sense of humor. Trust me on this. So you want to store the photograph, want to take the photograph to show that it's used exclusively for business. Get those cookbooks out of the bookshelf. Get the bridge books out of the bookshelf. Keep that photograph just in case you get audited. Secondly, you want to show that you use a room regularly for business. Regularly means at least 45 minutes a day, 4 to 5 days a week. And you want to show that you use your room as one of three ways. You have to be a principal place of business, which has several different options. One option is the majority of your time spent for operating a business in your home. Now, by the way, this doesn't have to be just your dental practice. You might say, well, I'm a dentist. I spend the vast majority of my time working at my other office. But if you have a second business that you're operating out of your home, you can claim a home office deduction. It doesn't have to be your dental practice. Another option is there's two choices. You have to do the majority of your management or administrative work from your home, which means the paperwork from your home, and don't do any other significant administrative work out of another office. In other words, your administrative work is done out of your home. So if you have a second business, for example, maybe you have a lab that you're operating for your dental practice, or maybe you do some consulting, or you have a network marketing business, or your spouse has a second business, and they do the majority of their management out of their home, and they do their administrative work, which means they do the paperwork out of their home, they qualify for as a principal place of business. So this is like a side business example. As long as you do your administrative work from your office, from your home office, and you have no other office where you do significant administrative work, you qualify as your principal place of business. That will give you a legitimate home office deduction. And let me tell you something. This is worth $2,400 a year in cash or more. We're talking about some money here. Here's something that a lot of people miss, and I've been using this for years. You know, people ask me, can I deduct my tuition for my kids? No. How about room and board? No. How about weddings? No. How about car for my kids or video games? No. How would you like to deduct the equivalent of every single thing I just said? I'm talking weddings, car, home, college education, and blessed by the government. Would you like that? Here's your answer. Hire your kids. Have them work in your business. If you pay them a reasonable wage, are reasonable wages that you pay an assistant in business deductible? Yes. And if they use that money to pay for their own college, their own weddings, their own housing, their own cars, aren't you getting the equivalent of a deduction? It's the same money. But in one case, you went from non-deductible tuition to deductible wages. It's the same money. In fact, you went from non-deductible education, weddings, housing, car, video games. By hiring them, you now can make a lot of this stuff the equivalent of a deduction. Now, I want to emphasize something here. If you hire me, IRS couldn't care less. If you hire Greg, IRS couldn't care less. If you hire your kids or your spouse, now IRS cares. So now you need some proof. So first of all, you want to have weekly timesheets. This shows what your kids did. In this example, this is an actual timesheet of what I use in my own business. On Monday, this particular child worked for 1 hour, opened mail, made copies, filed, and did paperwork. How could IRS say my kids didn't work for me? On Wednesday, for an hour and a half, they did some social media work, did some posting on Facebook and other things. On Thursday, they made PowerPoint slides for me. See, I'm showing IRS they worked for me. Another example, I had my daughter, this is a picture of actually my daughter, by the way. My daughter was in a 5-year program in digital design, which basically designs websites and does some applications for software and so on. I paid my daughter a very competitive fee to do some design work to design my website. I want to mention that amount of the fee, what I did was I contacted other web firms. I gave them some criteria as to what I want, and they gave me a quote. So I paid my daughter something less than what they quoted me. The amount I was able to pay her happened to cover 5 years of tuition at school, and I was getting a full deduction for that. I paid my son Matthew, it's a picture of Matthew, to do work during the summers, and he used that money to pay for his own college education. You know, I'm getting tens of thousands of dollars of deductions doing this. Are you? That's the point. You know, at the end of this webinar, we're going to show you how to receive your free step-by-step guide for hiring your family. So if you want to know how to do this and what you need to do, you're going to find out how to do this. All right, I want to mention a little bit about IRS audits because a lot of people worry about this, and there's a lot of myths about this that I want to cover. First of all, there are 10 ways to reduce your chances of an audit. The first way is to always send in your tax return either electronically or some kind of tracking, such as registered mail, FedEx, UPS tracking, Airborne Express tracking. By doing that, your chances of the return getting lost are slim, and if they do get lost, IRS will waive penalties. There was a case of one of the friends of my father, who was in the medical business, and who sent in his check with a $15,000 check. His return with a $15,000 check. The return the check got lost. He ended up paying the $15,000 plus another $11,000 of interest and penalties, all for something that was not his fault. Why? He just sent it using the post office when he didn't have any tracking. Always send it either electronically, FedEx, or UPS with tracking. Always. If they lose it, IRS will waive penalties. Secondly, notify IRS of any address changes. You know, I was reading in the latest, one of the later versions of USA Today, that IRS wants to give back $78 million in refunds. Maybe it's me, but do you ever get the feeling IRS isn't looking that hard? I guarantee if you owe them money, they fine you. Number 3, be neat. I had a friend that thought if they can't read his return, they won't get audited. That's strange. Number 4, file all elections you're entitled to. For example, if you file your return late, do it with an election. You can make an election to do many, many things, such as an election to write off equipment this year of up to $139,000. And by the way, there's new rules on equipment where you can write off 50% of any equipment that you buy in your dental practice, and in addition, write off another $139,000 above and beyond that. New rules this year, you should be aware of this. Number 5, report all your income by Social Security number. You know, a lot of dentists happen to have PCs and corporations and things like this, and many times these lines get blurred. They don't report the interest in the right entity. It might be corporate interest and gets reported individually or vice versa, and because it doesn't match what IRS says they made for either individually or for your corporation, you get audited. You want to make sure that everything matches the 1099s you get from banks and from insurance companies and so on. It's very, very important. Number 6, use a competent tax preparer. Now, what's a competent tax preparer? Well, that's somebody who's either a CPA, tax attorney, IRS agent, or a previous IRS agent, or an enrolled agent. An enrolled agent is somebody who takes a tough exam with the IRS. Do not use your insurance carrier, unless your insurance guy, unless he's one of those things, CPA, enrolled agent, or tax attorney, or former IRS agent. Do not use, I saw something about so-and-so's tax service. They don't have any degree whatsoever. You want a competent tax preparer. You want someone who is honest and who is aggressive. That's very important. I met somebody who said, Sandy, I have a great accountant. I said, well, what makes you think that? Well, he gave me $5,000 more in charity than I ever paid for. The IRS finds out about those people, and they audit every single person that accountant prepared. Break all your large ticket items into small segments. Write this down. That's very important. I know someone who's audited because he had $25,000 of dental expenses in 1 year. Does that sound high? Now, what if I told you he had orthodontia for his 3 children, plus perio surgery for all 4 quadrants, for he and his wife, by the way? Does that sound high now? No. What did I just do? I broke it down into small segments. If you pay any large ticket item, maybe you have a large loss in your home, like a casualty loss, a tornado destroyed it, or you have a large malpractice insurance, or something, any large ticket items, attach a schedule explaining that item. Break it down into smaller segments, showing what it's for. Your chances of being audited will be greatly reduced. You know, a lot of times people ask me, what are the 2 red flags that trigger the audit the most? The first one is using incorrect Social Security number, you know, transposing digits. Now, if you file electronically, that's not a problem. But if you don't file electronically, then it is a problem. And in which case, I would probably use the IRS label because the chance of them having a mistake is almost non-existent. The final reason people get trouble with an audit, believe it or not, is they fail to sign tax returns. You must sign the return. Now, let's say you get a letter from the IRS, and the letter says, congratulations, you did everything right, but come on down. First of all, it doesn't mean you did something wrong. It just means they think there might be a problem. The best time to prepare for an audit is when you're preparing your tax return, because if you assume you're going to be audited every single year, I promise you, you'll be in good shape. And folks, don't react like this to an audit. It's not that bad. It really isn't. Try to limit the scope of the audit. Now, what does that mean? If IRS audits you, they're going to tell you exactly what they want. You only bring in the records that they want. If they're auditing you for entertainment, that's all you bring in. Do not bring anything else in. This is a big mistake by dentists. They bring in all their records. And the problem is, if they do, then you're encouraging a fishing expedition for the agent to look at other things. You just want to bring in what it is they want. And that is another aspect of this. A lot of times, IRS only has 3 years to audit you from when you file your tax return. It's called 3 open tax years. A lot of times you get an audit notice 2.5 years later or something like that where they don't have much time. So what they ask you to do is to sign an extension to go forever, go for another year or another 2 years on everything. You never do that, never. What you do is you say, okay, I will sign the extension, but only on specific items. Make that extension very specific. Obviously, the more narrow, the better. Maybe it's just business expense or just this item, but make it specific. Don't just sign a blanket extension. That's not the right thing to do. Number 4, the burden of proof is on you. You know, unlike a murder where the burden of proof is on the government, it's not true in tax law. You're actually better off committing a murder, to be honest with you. In tax law, you have the burden of proof, and that's why you must have the right documentation. I can't emphasize the importance enough of a tax tracker or tax diary for you. Here is a major thing. Do not go to Goodwill and dress for the audit. IRS will never believe it. And by the way, don't do the opposite. Take off no expensive jewelry like Rolex watches, because IRS agents hate people who look like they make more money than they do. This is an important point. I want you to write this down. Be on time. Be on time. Here's why. An hour before the audit, the IRS agent starts looking over your tax return to see what the problems are. If you're late, you're giving them more time. You always want to be on time. That's so important. Be organized. One of the reasons we've been harping on a tax tracker or a tax organizer is that it keeps you organized and it maintains that burden of proof. If you do that, you have met your burden of proof. It's so important. Here's another very important thing. You know, I don't know if you watch Law and Order: Criminal Intent. What's the one thing that these shows don't want the perpetrator to bring? And that is a lawyer. Why? Because the lawyer is going to tell them to shut up. The number one reason people get in trouble with the government, not just the IRS, but just with the government, is they volunteer information. You can ask any ex-IRS agent, police officer, drug agent, they'll tell you this is the number one reason people get in trouble with the government. If you ever get audited, and normally I don't recommend you go with your accountant, but sometimes you have to go. In that case, you ought to say 4 things. And here are the 4 answers you can give. Yes, no, I don't know, it's my accountant's fault. So let me repeat that again. Yes, no, I don't know, it's my accountant's fault. Do not elaborate. When I was a starting accountant many, many years ago, I didn't know that. And I brought my client to the audit, and then I'm arguing with the IRS agent, and all of a sudden my client decides to chirp up and say, I don't know why you guys are arguing. I did this for the last 8 years. I wanted to hide under the couch. You are not to elaborate. You are to keep your answers short, and that's it. I had a lady who was at my seminar, and she was being audited. That's one of the reasons she came to my seminar. And she said, Sandy, I find I lost $500 worth of receipts. If the minute the IRS agent sits down, should I tell him so he'll think I'm honest? The problem is, if the minute the IRS agent gets $500 out of you, you know what's going to happen? They're going to dig deeper, and you'll end up losing your tail. You definitely don't want to do that. Now, a couple other things. In the IRS agent's manual, it says if you're very easygoing and you want to keep closing the case and you want to settle, you're probably hiding something. Always make it a little bit tough for them. For example, if an IRS agent says this is not deductible, ask them for the reference. If they give you a reference, well, if they don't give you a reference, you tell them to politely jump in the river. But if they give you a reference, you then go to this chart. This chart is a document value of tax law. The higher up you go in this chart, the more authoritative the tax law is. So, for example, let's say there is a tax court decision that says you cannot take a deduction, but there's a Supreme Court decision that says you can. Which is more authoritative? The answer, Supreme Court. Let's say there's an IRS publication on the very bottom left that says you cannot take a deduction, but there's a regulation, which is what most of my stuff is based on, that says you can. Which is more authoritative? The answer, the regulation. The higher up you go, the more authoritative the law is. You know, I had a lady who was at my seminar, and she waited till everybody left, and she asked me a question. She said, Sandy, if I was being audited, I handled the audit myself, which I should never have done. I know you said to use an accountant, but I didn't. The agent was an idiot, and unfortunately I called him an idiot. She should have never have done that. I just couldn't handle this agent. They sent me this letter. He disallowed almost everything I had. He sent me this letter. I ignored that, which you should never, ever ignore a letter from the IRS. Well, finally, I got a letter called a 90-day letter. A 90-day letter means you either have to meet with appeals, IRS appeals, you got to go to court. So I referenced her to my friend of mine who's an attorney. And my friend said, I have good news. You're not going to owe anything because you've got the right records. Bad news. Now, remember, the IRS wanted, by the way, $15,000 from her. Bad news was his minimum fee was $20,000. What do you think she did? If you said pay the 15, you'd be wrong. Remember I said you want to be aggressive. The reason being is that, number one, if you pay your lawyer 20 and win, the IRS will leave you alone. Whereas you pay the 15, they'll keep in touch. Secondly, it's actually cheaper to pay the IRS pay the lawyer who's representing you $20,000 than it is to pay the IRS 15 because that $20,000 becomes tax deductible. Remember, you get that 20 to 40% rebate. So you definitely want to be aggressive. Beware of special agents. They are the criminal investigation arm of the IRS. If you ever get a criminal investigation, you always hire a criminal lawyer. Do not say anything to your accountant because what you say to your accountant can be gotten by the IRS. You want to hire a criminal attorney. If necessary, the criminal attorney can hire the accountant, and now whatever you say is protected. Strategy 13, never ever die. No dying is allowed. The only thing allowed to die around here is my jokes. And the reason being that 65% of all final returns get audited. And finally, IRS pays a 10% commission to rat on you. Did you know that? By the way, you know who the number one rat is? Ex-spouses. Ex-spouses. Number 2 rat is disgruntled boyfriend and girlfriend. Number 3 rat is disgruntled employees. Now, I'll give you a hint. The number 4 rat is somebody who's got an axe to grind to get you. You know who that is? Answer, ex-partners. Let me warn you, rarely form a partnership unless you take 3 aspirin and lie down and you can avoid it. Partnerships can have a real problem. Ex-partners, I've seen litigation even more brutal than divorces. And finally, people in the same business, dentists with dentists. Those are your top rats. Now, I want you to remember, do you remember when I said that 84% of small business overpay their taxes by an estimated $150 billion a year? And why do they do that? Well, a couple reasons. One, they're trying to do time-consuming and extra paperwork by writing everything down. That's assuming they even try. Or they procrastinate. They don't have something triggering them to write down the right deductions. Or they lose receipts. The money will go through the wash, or the receipts fade. They're told to keep a mileage log, but that's a pain in the neck. Or they don't know the rules, and they're scared of an audit. What if you had a robot to help you track your business mileage for you automatically, instantly record deductions, automatically store receipts, give you tax tips and strategies in easy-to-understand language, back up all your deduction and records in case of loss, so everything backed up in a bank-level security, audit-proof your records with a simple-to-answer questions, motivate you to maximize your tax deductions, and to prepare reports for your accountant so you don't have to do this. You had all of this. That would save you literally thousands of dollars a year if you can do it in under 2 minutes a day. Well, welcome to something that I have been working on for 10 years, and it's called TaxBot. TaxBot is available for the iPhone, the Android, and web. I want to introduce you to one-touch tax relief. And the way this works is it'll reduce your business taxes by literally thousands of dollars every year. It'll simplify your record keeping because all you're pressing is 1 of 2 buttons. It'll safely bulletproof yourself against an IRS audit and give yourself more freedom, time freedom, money freedom. Now, what does it do? First of all, it will instantly store receipts for you. So it will store all those things in a bank-level security with duplicate backups. You don't have to worry about losing receipts, faded receipts, any of that. In fact, we have a ruling, IRS ruling, that says that electronic documentation like ours is now acceptable. So we have the IRS agreeing to this. So first of all, you can have a place for storage forever on the cloud in multiple backup places. You can snap a photo of your receipts, and you can answer simple questions to bulletproof your records against an audit for the rest of your life. Now, what are the simple questions you have to write down? First of all, you write down what, which is automatically input, which is your meals. You write down the business purpose. Why did you take that person out? And by the way, if you have an Android, you can dictate it because Androids have voice recognition. You put in the amount. Where? I went to Outback Steakhouse for dinner, for example. And finally, when, which is automatically input by virtue of the phone. And then you press attach receipt. It gets stored on the web, and you never have to worry. And I forgot who, what's their name? And you never have to worry about an IRS audit again. Now, in addition to having all the questions for travel and entertainment all stored on the web, including reports that you get for categorizing your expenses, we also did something really, really cool. We have an integrated mileage tracker with a GPS system. So all you do is press a button, start mileage tracking. You'll see a little pin there. It'll keep track of your mileage. When you get to wherever you're going, you press end trip, or you can press lap if you want to do multiple stops. It will record the mileage and automatically, see this on the right-hand side, automatically record the address of the trip. Store it on the web for the IRS in case there's any questions. If that isn't phenomenal, I don't know what is. The point is, it will eliminate paperwork and save you time. And as I mentioned, you get a secure web portal in the cloud, which will track, you track it, we store it. Records will be stored with bank-level security according to IRS standards with multiple backups. We will edit you can edit the records anytime, full security, and download the reports. And you get all kinds of reports, so you can categorize what you're spending on every area of your practice. You never have to worry about losing the information. In addition to all that, you get My Tax Training on demand, 24/7 access to 3-minute audio tapes that will teach you hundreds of things, among which we have writing off your car expense, including business mileage, and exactly what you need to do. For example, you don't need to do it every day, believe it or not. You can do it for 3 months. How to write off the equivalent of your kid's child education and weddings in a lot more detail than I've been able to cover. How to deduct 100% of your medical expenses. How would you like that? Without a threshold, no threshold. How to deduct your fun, movies, plays, entertainment, including season tickets. How do you like this? How to double deduct your business equipment. How would you like to write off all the equipment they use in practice twice? I'm not kidding, by the way. How to turn your vacations into a tax-deductible event. How to create a retirement plan that beats any government plan told you by comparison. How to keep your records bulletproof against the IRS and reduce your risk of an IRS audit, and tips on what to do if the IRS contacts you, and much, much more. With one touch, you get TaxBot, which includes all kinds of storage of information. You get me on tax tips. You get the storage. You get the GPS tracking. All of that is included. You know, here's my point. Are you going to take advantage of the cashback card, which is 20 to 45%, or are you going to let the government keep it? It's that easy. You know, I want to emphasize, I think we agreed earlier that having a rebate card like this, if you have it, which you do, you'd be stupid not to use it. You have a choice. You can spend 2 minutes a day complaining about taxes, and which is what you're doing now, 2 minutes probably not working, and doing the documentation that may not be right, or you can spend 2 minutes a day reducing your taxes, doing it correctly, and having that peace of mind of never having to worry about an IRS audit again. Same time, but one with a lot better results. One will cost you aggravation and money, and the other will make you a lot of cash and bring you that peace of mind. And that's really your choice. So I want you to take out what we call the 30-30 challenge. We have an absolute money-back guarantee where you will accrue deductions worth at least 30 times your investment in the first 30 days, or receive your money back. That's what we call the money-back challenge. And by the way, that sounds, just to give you an idea, where else are you going to get a 1,000% or more rate of return? This is actually 3,000% guaranteed, but you're certainly going to get at least 1,000%. And I know this sounds guaranteed, kind of unbelievable, but I've been using TaxBot for the last 2 months since we developed it, and I have generated so far, just in 2 months, $1,654 in deductions. You know what that averages? That's $1 a second. On a per-hour basis, that's $3,500 an hour for my using TaxBot. I don't know if you make $3,500 an hour from your practice, but that's pretty good. So I guess you have a couple choices. You can complain about taxes. You can overpay your taxes. You can worry about an audit. You can do the tedious record keeping, which you're doing right now, or with the same time, in fact, less time, you can lower your taxes, save thousands of dollars, stay audit-proof, and have easier record keeping. I mean, to me, it's a no-brainer. How do you sign up? Normally, we charge $19.99 a month. If you go on our website, that's exactly what it is. But Greg negotiated a tremendous discount for you. It's only $9.99 a month for all of that. And I'm including everything, TaxBot, my information, the storage on the web, the integrated GPS system, everything. And as I mentioned, we have a guarantee 30 times what you get in new deductions. And in the first 30 days, if you don't get that, just simply cancel and you get a full refund. How's that? That's not risk-free. I don't know what is. To take advantage of it, go to www.dentist.taxbot.com. That's dentist.taxbot.com, and you will save thousands. So, by the way, you will also get a couple benefits if you sign up in the next 24 hours. You will get a step-by-step hiring guide for hiring your kids and your spouse. You will also get a fixed strategy on how to deduct all your medical expense, dollar for dollar, without a threshold, and a free legal plan, which is a medical reimbursement plan, which normally a lawyer would charge you $1,000 for. You can download this and you will get it for free. It was prepared for you. You will also get a free webinar and consultation, and in your practice, this is very important, on how to protect your business from frivolous lawsuits and audits. All of that has a $1,250 value. All of that is included with TaxBot. Now, let me give you some stories of people who've used TaxBot. This is April from California. As a mom running a small business, time's a killer for me. Doing my expenses and tax stuff always got put off or not done at all. TaxBot allows me to capture deductible expenses as they occur in less time than it takes me to braid my daughter's hair, which I now have more time to do. So, me and my girls, thank you. Here's another testimonial. TaxBot, this came from Utah actually, Glenn. TaxBot tracked over $2,500 in deductions in my first 30 days with little or no effort on my part. I'm no longer afraid of the IRS. I can protect myself against an audit and track my mileage and expenses, all in one application. I guess there really is an app for everything now. Thanks for making it so easy. I love Sandy. Thank you. And he's a hoot. So to take advantage of this, it's only $9.99 a month. You get an unconditional money-back guarantee. In the first 30 days, if you don't get at least 20 to 30 times this amount, we'll refund your money. Just go to dentist.taxbot.com. And I want to emphasize, folks, you're spending at least a minute to two a day trying to keep up with the government, and you still don't have that peace of mind, and it's probably not being done right. For the same amount of time, and probably less time, in fact, you'll have that peace of mind of never worrying about an IRS audit again, and save thousands and thousands of dollars, which is what's happening to me as well. Now, by the way, I did get two questions on here that I want to read, and then I'll take some more of your questions. The first question is, I have an iPad 2. Does it work on that? The answer is yes, it does work on the iPad 2, better than the iPad 1, actually. It also works on the Droid and the Droid tablet, by the way, so I want you to know that it does work there. Let's see, there's another question. What if we don't make money in the first years of business? Don't worry about that. As I said, as long as you're trying to make money, that's the key, you still can write off those losses. So I will turn this back to Greg to see if we have any other questions we can answer and make your life a lot less taxing. Greg?
All right, Sandy, I got a couple for you here. First one is in regards to continuing education, which obviously a lot of doctors and dentists are doing on a regular basis. The specific question is about travel and food and some of those extra things that are connected to a continuing education trip.
That's a good question. The answer is all of those expenses are, it depends on whether you're an employee or you are a self-employed dentist where you have your own practice. If you're an employee, they are deductible as a miscellaneous itemized deduction. If you are a self-employed dentist or you're incorporated, you can take a full deduction for the actual tuition for the continuing education, for most of the travel expense, and 50% of your food. And that includes parking, too. Parking you incur to get to the continuing education program.
What about kids and hiring your kids? Is there an age limit on the age of your kids when you hire them?
That's an excellent question. There's no upper age limit. They could be as old as you want. There is a case, however, that says you can hire them as young as age 7. Now, they have to legitimately do something for you, but there is no upper limit. So if you have a 45-year-old daughter who comes home to help you in your practice, or maybe serves as your assistant, that's fine.
All right, Sandy, I got one more. Specifically asking about how to kind of work around this between yourself and your CPA. If you could maybe give some advice as to how do you track your taxes yourself and then work with the CPA to actually make
That's
that
an excellent question. Basically, you have to keep track of it yourself because the CPA isn't going to be with you every single day. So you're going to have to somehow have some way of tracking. That's why procrastination is eliminated here with TaxBot. But by putting all the expenses, who, where, why, when, how much for entertainment, and all the questions for travel, you will then get set reports. These reports are downloadable and can be given right to the accountant for them to do your tax return. Eventually, and when I say eventually, I'm talking within the next year, we're going to have them downloadable into QuickBooks too. But for right now, you can download them, the reports, give them to your accountant, and have them easily transcribed to the tax return. It's very, very simple, very, very easy. I designed it specifically so it would help the accountant speed up being able to do the tax returns.
Sandy, that's all I got for you. This was phenomenal.
Oh, okay, that was easy.
Thank you so much, Sandy, and want to just encourage everybody to go check that out at dentist.taxbot.com. I know, I watched a webinar that Sandy did a few weeks ago, and I immediately made sure that I had signed up to use this. I mean, I think this is just such an incredible product. It's so easy to use, and it's going to save us so much time and money, and those are two things that I think all of us look at as being extremely valuable.
Oh, by the way, Greg, it also keeps a running total, I don't know if you noticed it, of how much you're saving for the year, throughout the year. It's right on the front of TaxBot.
Hey, well, another reason to make sure to do it. So, Sandy, hey, thank you so much. Thank you for your time and your expertise, and thank you to everybody that joined us today, and we'll make sure to see you next time. Thanks so much.